There's contact information. And I love this, washing the money. Right now it seems to particularly appropriate because most of you going back into your libraries are probably going to be looking at ways not to handle money, because money will make you sick. We all know we get colds and all that sort of stuff from kids who pull it out of their pockets. Okay, so for most of you that I can see here, you already know who does what. But I promised the new directors that would have been in Apple that are interested, I feel obligated to start at the beginning so you can all listen to music I'll never know. We're going to start with who does what. And I kept this in, this is not cute PowerPoint. This is so most of this can be read later when you have an issue you want to look up. Because, you know, I love those other PowerPoints. They're more interesting, but when I get home and I had a question, I can't find what I needed to know. Okay, so the library director, for those that are new, these are 4 of the things that really relate to budget. So you've got to keep the library informed about things that are going on. You are responsible for doing a draft budget. If job, you don't make up their mind, but you have to give your board a starting point. These people are volunteers after all. You need to be having a format that it clearly explains the monthly expenditures. If the board doesn't understand your list of checks, be real clear. So it's to John Doe furniture store, but I was buying a table. You know, you might put a description column on your list of checks. There's a fine, you don't want them to micromanage, but at the same time, you need to be clear. And your financial reports that you develop with or without the treasurer, it varies by library, those are your responsibility. So the library board itself has got what I call, Patty Poe coined this a long time ago, the 3 M's of library board leadership. The board is responsible for the mission of the library. They're responsible for the overall management. The buck stops with them in the directions the library goes, AKA strategic planning, no eye rolling, and money. They're responsible for obtaining sufficient funding to get the library in the direction they want to go. So budget development and financial oversight are part of the 3 M's. And if you have a board member that really is only there for the cookies, you need to look harder for your next board candidate, because they have to be willing to work budget and direction of the library. Okay, so the library board stays informed on the library activities and gives you feedback as a director. If you're a new director, well, even if you're a seasoned director, I would always work to make sure they understand where you're coming from and that you really ask enough questions to know what their concerns are as you go forward. The board's responsible for revising, reviewing, and approving that draft budget in light of the planning documents you have in place. So this is where you come back to, in my strategic plan, what are the key areas? What were the concerns we had to better serve the users in our community, and how do we go out and make that happen? The board approves the monthly expenditures and it should review and approve the monthly financial reports. Together, you develop short-term and long-term goals. You together go to present your budget request for tax funding to your entity, be it a township or a city. And districts, I will talk about your stuff specifically on May 14th in the afternoon. So the key here is that you do these things together. It's not one person's idea, and you're committing and voting to agree to work together. So there is a legal basis for this. And the legal basis is important because they're clearly enumerated in statute. And sometimes, whether through misfortune of different types or just actually laxness, the governing body of the library is not as positive about what their budget authority is. So I have put it here for you to come back. Now, I only highlighted, there are 2 paragraphs of this statute, and I'll put that in a shared folder. I'll mention that right now. I created a budget 2020 shared folder open to anybody that I hope you can download for. So I'm putting the PowerPoints I do, anything I talk about in terms of forms. I'll put the entire statute, those 3 statutes, I will put them in that folder. So you have one place you can go to look at this information. But the key thing here is what I've enlarged. So after your library is created, it's talking here about the municipal governing body first, which is the township or the city. It says the governing body shall forthwith, and it shall forthwith, establish a library and is hereby authorized to and shall annually levy a tax for the maintenance of such library in the sum as the library board shall determine within the limitations fixed by law. What that means is your library board has the responsibility to develop a budget that is adequate for the maintenance and the goals for that library. And this city or township is to levy what you ask. Now, we all know there are 100 different shades of that, but to legislators, shall is an imperative term. This isn't maybe if we feel like it, but we didn't last year. This is you shall. And you can't go in with your finger, what my kids would call the Meyer finger, my dad. You can't go in with an attitude, but you have to actually understand what you've created and why you need the funds you're asking for. And then we can have more harmonious relationships going forward. You can look all these up when I do a homework class for Apple. I have a couple little worksheets that help you define these terms. A fiscal year. The state's fiscal year is July to June. So the fiscal FY 2021 for the state starts in July of 20 and runs to June of 22. For libraries, you are in a calendar year. So you go January to December of the same year. So your fiscal year 2021 is January to December of 2021. Libraries, state entities, government entities should operate in Kansas on cash basis and follow cash accounting. There are variations that I'll show you in just a minute, but basically in the simplest of terms, it means don't spend it if you don't have it. It isn't to get spent until you have it on hand. And the income doesn't show up until it's put in the bank. So an expense isn't created until you pay for it, and you don't have income until it's in the bank. Fund accounting, we're going to talk about that in a minute, but basically that means there are certain kinds of operating funds and they are treated in different ways. Carryover is, in the very simplest of terms, what you have in the bank at the end of the year for a particular fund. So it's tied to a real number. It is a real thing. Revenue is income. Expense and expenditure are the same thing. And an encumbrance is what you do at the end of a year. And if you're going to encumber and you're a smaller to middle library and you don't normally do that, see your system. They'll walk you through the process. What an encumbrance actually does is say, I have this item and I'm going to run it kind of like a charge. I know that I owe those people $100 for what's coming in for books. So I'm going to go ahead and say at the end of the year, I received $100 of books and I have a payable out here for $100. The reason you encumber is so that the expense happens in the year that you want it to. And if that was totally confusing, you need to wait before you try to encumber. GAAP, you will hear about. Your system will talk to you about doing a GAAP waiver, which is a cash basis statement. And there's a template, and I'm going to make a note to myself. I've already committed to put that up. A GAAP waiver is something that you approve annually. It just means we're going to follow cash basis. And it's a resolution, and it just should go in your permanent resolution file. So the people that determine those generally accepted accounting practices are the GAAP, or the Governmental Accounting Standards Board, Accounting Board Standards Board, and that's actually a typo. It should be GASB, GASB, Governmental Accounting Standards Board. Note to self. You'll also hear your auditor or other people talk about debits and credits. I wouldn't worry about it if it isn't a comfortable term for you. You really could live your whole life without dealing with it. Is it a debit or a credit? If you have a good payroll or accounting system. Assets and liabilities, that starts to get up into upper tier accounting. I'm really not going to go into it right now, but we sure can at some point if somebody wants to. So, types of accounting. You have pure cash basis. Pure cash basis says, I don't count the income till it's in the bank, and I don't count the expense till I write the check.
Laura?
Yes.
We have a question about the
Sure.
dates when the GAAP waiver needs to be done.
The GAAP waiver, yeah, okay. The GAAP waiver can be, yeah, please always stop me because I'm not looking at chat at all. The GAAP waiver can be done anytime during the year. I always do it with my board in January. I know I'm going to be operating in this manner, and I pass that as just part of my January board meeting. Technically, you wouldn't have to, you could pass it in January of 2022 for 2021. But it's just easier to have it on a regular schedule. I would suggest doing it in January. And we have a template for that waiver. And then basically you have to change the years in it going forward. Modified cash basis is where you start doing, and modified accrual are basically close to the same thing. I'm collecting up, for example, with payroll, I'm collecting up in a payable account the amount of money I owe the IRS and the amount of money I owe the state every month. However, after I do payroll, depending on my payroll schedule, if I'm a monthly filer, I pay that right away. If I'm a quarterly filer, I pay that every quarter. And I've got some tips on payroll I could put up in that folder as well. Businesses run usually modified to full accrual, but government does not have to. All right, types of funds. All of you have a general fund. Every last one of you has a general fund. This is supported by a tax levy if you're a legally established public library. All your other incomes go in this fund. Fines, fees, donations, grants. You're adding them as subsets within this general fund. Capital Improvement Fund takes a resolution, and that should go in that permanent resolution file because it can get to be 30, 40, 50 years old. If depending on your library, that should go in a permanent file so you can find it. But what this does is allow you to create a special fund with a special bank account, so labeled as the Capital Improvement Fund. Now this can take you can have several different bank accounts for the Capital Improvement Fund. You could have a CD, you could have a savings account for capital improvement, you could have a checking account for capital improvement, or you could have a money market that kind of combines the whole thing. The trick is that is a special fund and it's limited what you can take the money out of it to do. It has to pay for something tangible that has a life of more than 20 seconds. Usually they say 3 to 5 years or more. So a major renovation, all new carpet in the library, Capital Improvement Fund. If I have carpet squares and I buy 3 carpet squares, that's expense. If I repair the water heater, that's expense. If I replace it, I can use the Capital Improvement Fund. It has a new thing of value. Employment Benefit Fund also requires a resolution that you have to take to your city and or township, and your city and township has to agree to it. What this does is it allows you to pay for the library's portion of Social Security, Medicare, unemployment, health insurance, workers' compensation, all those benefits that are mandated, and you know, a few that you might offer, like the health insurance or disability insurance or life insurance, whatever. You could pay for that out of that fund, and it has its own levy. But you can't have that fund until your city or your township approves. And there is a form, there is a resolution format, and I'll put that in there too. One with the CIF. Last thing is, some of you have special endowments or trusts. Yes?
Robin wants to know why grants go in the general fund. It's not a tax levy. So And what fund does an appropriation go into?
Well, the appropriation or the tax levy, that general fund, it depends on how stiffly you want to divide things out. But general fund is operations, if you think about it that way. So you could have several different kinds of columns running under the general fund category heading. You could have a checking account. If you wanted, you could just put tax appropriation in one fund and account down. You could have all the other types of income coming in. You could have a grant coming in, and you could then track each one of them. There are other ways to do it in accounting. I'll get into how I think it works best at the end of this. But technically, the general fund is not just the tax income. You can put other things in there.
Okay, we got a couple other questions here. Do most libraries offer short-term disability and life insurance?
No, but short-term disability is not extremely expensive. It might be something to check out. Some libraries do capers. Capers comes with long-term disability. Some health insurance comes with a group life policy. You could have a group life policy through work, but most people don't.
And then can you get an employee benefit fund when you're still under home rule?
Home rule, if it's strictly a charter ordinance for your tax levy, yes, it's a different fund. And the way that fund works is they definitely can't argue with what you say you need. I can get into I could do a whole lot of talking. Let's get a little further into this and then we'll come back. Does that work for you guys? I won't forget, and you bring it up again. Hold me accountable. Okay, types of budgets. Most all of you do a line item budget. I don't like to see you do a zero-based budget because you do need some money heading into the next year. So if you end the year with nothing in the bank, your employees have to starve until you get your next tax distribution. And that's usually not good for business. So you need carryover, and I really feel carryover should be a 2 months worth of your average January, February expenses. That's what you need because you might not get your tax money for a while. So the budget and planning, they're complementary processes. If you don't have any long-term goals, then you're only dealing with, oh, what do I do now here? And you're kind of like that squirrel, you know. You're always changing what you're thinking about, and you kind of spin yourself into a hole, really. If you don't have any short-term goals, then that long-range, you know, pie in the sky is literally pie in the sky. So you need your strategic plan has got to have short and long-term goals, and then you have short and long-term money decisions that you make to reflect those goals. I know I'm beating a horse here. So your budget process for the library is a little different from home in that you can't really be sure of how much you're going to get where, when, or why, and it's just not fair. You know, if you're doing your home budget, you can start with, okay, how much do we make for the income side of this? You have an idea of how much you might receive, but how much you might receive and what you actually get are usually different numbers.
And real quickly, there was a question about the capital improvement fund needing to replace the sidewalk out front. That can come from capital improvement, right?
Sure.
Okay.
If that's something that's your responsibility and not the city's.
That's what I figured. And then is the employee benefit fund a different line item on the township budget for the library?
Yes.
Okay.
Has
And
its
one
own
came
tax
in
levy.
while I was talking. Do you recommend looking 3 to 5 years back to see trends?
Definitely. As a new librarian coming in, you're going to find, I hope you find a really nice set of a 3-year look back, but that's often not the case. And so do the best you can. Really, a budget process is a cross between actually trying to have real numbers and rubbing a crystal ball. So by the time it becomes really clear, you can't go back and change something, and we'll get into this in a minute. The key thing for your board is to make them understand this budget is not a cost reduction program. It's not how little can we spend is not the ultimate goal, but what is the best combination of responsible spending combined with what serves the public in your community the best. Okay, so this is more on the discussion of what cash basis is. And I really need to change this at some point. You talk budget all year long. First, you're talking, so right now for 2020, as you started the year, you're finishing up 2019 as you're starting 2020. And then, you get about the first quarter into 2020 and you have to start dreaming about what to do for the budget planning for 2021 while I'm operating 2020. So it's like interlocking circles. And it's really frustrating, but that's what comes with the job. You're the director. I'm sorry, but numbers become part of your life. So here's the steps. January to April, figure out what worked best. We're going to talk mostly today about the internal library budget, which is every single piece of the budget. It is your internal operating document that the board uses and you use to see how things are going. Now, in May to June, after you get that budget created, and I should really say January to May, when you start working on the municipality budget, when they start wanting your information, they're wanting a piece of that big budget. The key is you can't develop a talking point about the piece if you don't have the whole budget, so you know what's going where. And they will publish the notice of hearing in the newspaper, and it has the budget line. It'll say library so much, and it'll say library employee benefit if you have it for a levy. They have a budget hearing that gets approved. What I am asking, if I go back here a minute, did I just make you all get sick? As you develop this budget, I really feel like most of you could avoid some really big problems if you would have some good conversations with that city manager. And when they get a draft put together, a first draft put together of that budget, ask to have say, please call me and let's come in and make sure we have avoided some problems. I would like to see the library budget page of the draft, and I want to see the library grant tab. And I'm going to talk to you about that in May. But if you could get those two things looked at and make sure they levied what you asked for property tax, and that you meet the 2 tests for the state library to get state aid. If you could see those 2 pages before it goes to the council for approval, you could maybe have input and head something off at the pass before it becomes a problem. There are some libraries we could send you to that wish they'd done that and move things along. I have the link down at the bottom. Those budgets, once they get approved, go on file online. Right now, the records that you can easily see go back to 2012. If you needed earlier ones, we can get them for you, but they're not up online. So here we go, big budget. Wasted half an hour. I will get busy. So you're talking about, what do you need? What worked last year, what didn't, what's growing, what's declining. So as you're starting to plan for next year, how are things looking as they come out this year? Cash flow sounds like a scary term, but that's just your best guess how much money you're going to spend between what you've spent already and the end of the year. So look at last year and see what you spent in that upcoming time period, add it to it, see how that affects how much money you have in the bank, because cash flow will determine what you think you're starting with for carryover. We'll get into more detail. So your operating budget include all sources of income. Don't leave anything a mystery. If you know, these are examples that come from our at NEKLS sorts of things. I do this, I give these to our board periodically to make sure when they're looking at board reports, they're understanding what it is. So the checking account is the general and employee benefit fund checking combined. So you see I have different things that are going in different, you can have a separate bank account for state aid or memorials, but why? It's another account you have to reconcile every month. It requires checks that have to be maintained in a secure fashion, and you can do that on a spreadsheet much easier than and get the balances for the memorial and other things, especially in good software like QuickBooks. It's not hard. Most all of your systems could help you get that set up and running in a good way. I saw Alice was here. Alice is a pro at that. So everybody in Northwest should get Alice to help them. George knows more than he lets on too. Anyway, your bank accounts, you need to reconcile those monthly, or if you have quarterly for some savings accounts or annually for some CDs when they mature. So you see here, I've got what it is and what goes in the account. I'm just flipping through this. The key thing here I will take away is every single one of you need to have this many breakouts for your taxes. If you don't have an employee fund, those 302 numbers that I show here are not important. I'm showing you this also this way for another reason. You can assign account numbers to things. Most of you don't need to do that. I wouldn't worry about it. People that, a CPA, it likes to deal in account numbers, but that's not necessary. So you could just have everything that's over here in the descriptor, but you need to have all these tax breakouts. When your city gives you that check, it should be accompanied by a breakout. The county gives the city a breakout for that dollar amount. However, if it's difficult to get from your city or township, call the county. They will fax it over to you. It isn't a mystery, but you need to track it. Which one is higher? Which one is lower? How's my money coming in?
Do we have to budget income for every tax type or some,
Yes.
I don't know, reliable, unreliable?
Okay. You levy for a general fund ad valorem tax. Ad valorem is the Latin for property tax. doesn't probably transfer exactly, but its value on property. You have a lot of different vehicle taxes. Motor vehicle is that MV. Recreational vehicle is the RV. There is a special 16 to 20 ton truck general tax. There's a larger commercial vehicle tax. There's a watercraft tax. Those are all the vehicle taxes. You also have a delinquent tax, which is money you're receiving now from a prior year. Not from the current year, but from a prior year. And you get estimates on all the vehicle taxes from the county treasurer. Sends them to the city gives you those breakouts.
So do libraries receive excise tax?
Depends on the county and the city. And you may get some other taxes, but almost none of you receive sales tax at all. So all the worry about sales tax is not a factor for you. We'll go into numbers here in a little bit. These are just all the different kinds. I put numbers on some, didn't put numbers on others. That actually was deliberate. I wanted you to see that what I meant by, but the key is that descriptor off, you get a new board member, I would give them a chart of accounts that has what the account is, the type of expense it is it income, or the classification in some ways, is it a bank account, an income account, or an expense account, or a liability. But you don't need to worry about the liabilities if you just gave them the big picture here. I just think it's helpful for your board to really know what you mean when you say you are paying out of programming. What does that cover? You can't expect your board member to know.
And Gina wants to know, the township at the end of the year keeps money from her, or she has to pay back because it's money that wasn't in the budget, and they say they can't give it to us. Wouldn't that be coming from delinquent?
No.
And you can answer that directly later if you want.
Okay. I'll get into, Gina, I will, if I don't directly say so here, I will show it in the next one, and I will talk to you aside from that as well. Okay. So this goes into how you are figuring carryover. So some of you have a capital improvement fund. Some of you have restricted things like endowments and gifts. You don't really need a state aid bank account. I know some of you had one. I would not do that, but it's however many things you want to be responsible for securely, for checks, and how you want to reconcile. This is when the county is required to have the money in the entity's hands. So the county has to give the city by statute, or the township, the money for all the things under that entity. The library, if you're a city library, the library's money goes to the city. The city is charged with just giving it to you. Lots of times they make you wait and jump through hoops. But the county has it there on January 20th, March 20th, June 5th, and then there's the September, October, and December dates. By June 5th, most of you in a regular year, most of you have at least 95 to 98% of all the property tax you're going to get. It comes in usually in the first half of the year. And the rest of those distributions are vehicle taxes and whatever delinquent taxes or late taxes, property taxes that have come in. So this June 5th will be a good indicator of just how much delinquency is going on in your county. And this is why you need to check this. State aid, grant and aid payments come in your bank account Usually we're doing really well anymore in February. It used to have a little less when it was checks. And then some of you get system grants, or almost all of you really do in some form or other. There's some other sources of income. I just put it all there so you could think about it. So now we're going to get down to the nitty-gritty. Thought we'd never get here, right? Big budget. This is your entire budget that the board has to work from. You'll notice the first thing there is carryover. So it says for 2019, prior year actual, if I were doing this 2019, you know how much money you had in the bank for sure, because it already happened. And then here's, as you go down the list, these are all the other, I wish I knew how to do a pointer. Oh, is it over here? Nah, it's okay. Anyway, so that prior year column is something you should be able to fill in totally. Okay? You know it for a fact. I made these areas yellow because these are the tax parts of the income. And what I'm looking at here is a general fund budget. You'd have one of these also for an employee benefit fund if you had one. And I'll show you some of how that could work later. But at any rate, so current year is 2020. You know your cash carryover. That you know for a fact. It pops up, you know. You're only seeing the income part of this page, so you don't see how it came there, but it's the money you had at the end of 2019 becomes your carryover for 2020. So now you're guessing. Now the crystal ball comes out and you're looking at what you've gotten January through April and what you think you might get for the rest of the year, and you start filling in these numbers here. Now you have a 2020 budget, and this is a good time and a good check on, are we going to hit what that budget hoped to do? And I would modify this if my 2020 budget that I did my best guess in on finally in November or December of 2019, if something's come up and gone sideways, like say COVID-19, how do I think that's really going to impact income? This is where I'm going to internally, I'm just going to guess where I think it's really going to hit where the dollars are going to be. This is a time for internal honesty. So you're doing income. Now, if you get over here to proposed, that's 2021 for our purposes. And you've got your money that you think might come in these other places. You will get from your city these motor vehicle numbers, the vehicle numbers 1, 2, 3, 4, 5. You may have more, but at least these 5. They should be able to give you these numbers. And just smile real sweetly and say, well, when you get far enough on your form as you're putting your Excel spreadsheet together, please give me these numbers so I can accurately give you how much property tax I need. Delinquent tax is something you really ought to track yourself. The city isn't going to pay as much attention to it, but if you have gotten at least $500 a year for the last 3 to 5 years, I'd stick $500 in the proposed because you're going to likely get it. It's not a wild guess. The little blue square is the algebra part of this whole thing. And see, you didn't really know you'd use math from school, but this is, we're solving for X. We are solving for how much property tax do I need to make this lay and play. So I would tell you normally, and I think it's a good exercise, I never start with income. You can get really real when you have to by what the numbers are going to work for. I always start with expenses because I want to put in, if all things were like I wanted them to be, how much do I need for programming based on what my strategic plan says? How much do I need for, you know, materials? What kind of collection am I putting together? I'm starting here. And the most important thing I'm starting with is how much am I paying my people? Because your people are really the most important part of that building. The service they deliver is incalculable, but you've got to come up with expenses. So I would start here. You know the actual, and so you wouldn't maybe necessarily have, you know, the carryover and stuff you can figure out later. Just look at this. How much did we spend in 2019? What am I thinking I'm going to spend in 2020? And what do we really need? You know, you can dream in Technicolor and you can come back to black and white if you have to. Or you can lighten the shades a little bit if you need to, and just go for colorized. But if you don't dream here, you will never have a goal, long-term goal for your library. I'm not saying don't be practical, but start here because you can always back up. But if you start small, it's really hard to dream big. I don't know why that doesn't work as well in the reverse, but at least it doesn't for me. Now, I've made this all on one piece of paper. And I hope you can all see that. And you see we're still solving for X, the blue square. So here's all the carryovers are at the very top. So we'll start with 2019 in this case, and we'll go down with all the money we actually received. So we had this much cash available, $93,506.94. In 2019, we spent $83,250, and that means that we had in the bank account, it's verified in two ways, on this sheet and adding up the bank accounts, we had available to spend for the next year $10,256.94. Whoop, popped up there to the top. This is 2020, and you're going through how you think it might carry out. And you're feeling like at the end of 2020, you might have $9,500 left. So there it is. Now, here's your dream big part. And here's the other incomes as you know it. And you'll notice down here, we have $93,648 worth of expense. But the total cash, since we don't know how much property tax we're asking for yet, the total cash that we have is $38,000. And down here it says, whew, to be at zero, you need $55,573.31. However, that's a zero budget. You need that 2 months of carryover. And in this case, the library really is shooting for $9,500. So you would take that negative number and make it a positive and add 9,500, and you've now solved your blue square. Does that make sense? So I'm going to show it to you in some other ways here. But you're solving for X. X is the blue square. So 38,000 subtracting 93,000 leaves you a hole of 55,573.31, and they would come take you away if you ran in the deficit that large. You get in trouble. So, but you're solving for how much does this need to be to give me $9,500 down here as estimated carryover. All right. Now, I went about this a little different way. I wanted to show you how you're starting to build your story, and you don't have to color code it. I just thought it might be a different way of looking at the money. So here is and if you look here, this column, I'm just looking at proposed budget in a different way. So I have $9,500, a little more left over. So what does that mean? Well, it means none of it's tax dollars. Because you all always spend all your tax money down to zero. You do not develop carryover out of tax funds. Okay? You do zero budget finance on your state budget form. That's a zero budget, but your real internal budget has money. Am I getting that across? It comes from all your other sources. You know, if your system grant doesn't have any strings, that could be part of your system grant. I don't care, but it's general fund other. If you notice here, I have general fund tax, general fund other. Am I going to get cut off? Okay, so I'm sorry, I'm going to go about 15 minutes over maybe.
And I think your clock is a little off because I still show you've got 10 minutes till noon.
Okay, good. It's my clock, my watch is fast, hot digging. All right, I will quit talking at lightning speed. But if you can see here, I color coded this so you could kind of see where I'm coming from. So if you have 90, you know, you hope to spend $93,000, you've spent all your tax money. Do you see where that's coming from? This is the income top part. Now, if you have a capital improvement fund, that's a different account. If you had an employee benefit fund, you could do this kind of breakout, except employee benefit fund really only has tax dollars in it. And I can show you a more complicated model with all of those, but I just thought for purposes of looking at this, and for those of you that really know this by heart, I apologize. Now, here's the expenses side of that same thing we were looking at down here. And we're hoping for an estimated carryover of $9,500. Let's come up here and talk about we solved for X. Do you see? Whoops, can't click it. We solved for X. Ad valorem tax, if you come across, says we're going to ask for $65,073.31. I wouldn't do cents, I would round that up. And I probably, if I were doing it, would ask for $65,075.
So what if there's not enough non-tax income to cover carryover?
I'd be surprised if you think about it. If that's the case, I'd be shocked. Because what you have in the bank right now is not taxes, it's other. It's part of that cash carry, unless you have zero in the bank. And that would make some difference. I'm gonna operate this way, and you need to send me a copy of what you have and we'll talk. Or I would suggest strongly, if you're not in my system, that you start with your system staff, because they know you the very best. And then if they have questions, we can all talk. But your carryover dollars are almost always, I don't know anybody who gets enough tax money that they can't spend it all. I don't know anybody in that situation. But that would be my take. So like I said, I would not actually do this. I would round it up to a nice whole number in the, you know, I wouldn't go 74, I'd go 75. It isn't going to up your mill very much at all, if any. So now, in the expenses, if you notice what I've done is I took that. So here, let me go back again. Of all the different kinds of tax, property tax and all the other kinds of taxes, I think I'm going to get that $75,092.31. So there's that $75,092.31. So I'm in essence creating the story I'm going to take to my city about what I'm spending my tax dollars on as I code this general other from other money and general tax. And I would always start with payroll and the mandated benefits, and most of you don't have health insurance. It'd be nice if you did. Most of you have only the state and federal mandated benefit halves that you have to pay for. So if you actually are a library that had enough tax money that you were able to do all the gross salary and benefits plus pay for all your collection and part of your utilities, you're doing really well. Because I'm betting 90% of you are stopped right up here at the top between salaries and benefits. If you even get 100% of those, you're doing very well. That should be your first goal, is to cover salary and benefits 100%.
And there's a little bit of a discussion. Director asked if state aid was considered taxable income, and I said no, it's not. And Alice,
Taxable,
right, or tax income, like the
well, no, it is tax income from the state to you, but you don't count it in your tax income for your entity.
right. And Alice mentioned that state aid cannot be carried over. So
no, you have to spend state aid.
Right.
And if I were you, I would be really careful and I would spend whatever you get, because believe me, it's not much anymore. I would spend it all on collection.
Mm-hmm.
So that when I'm reporting to the state how I spent their money, I'm spending it all on collection.
And then Robin from Emporia said that they receive a set mill amount. There's never an ask. She receives the proposed income numbers from the city 5 years out. So not really a question, but a comment.
Well, and I don't know if Robin has a charter ordinance. And like I said, that is how things have evolved in Emporia. So changing that will be not something you do overnight. Maybe working to have them, take their strategic plan and your strategic plan and then try to maybe get them to only plan out 2 years or 3. It's a process. And whatever you inherit, you can't change overnight. But I can tell, I'm talking to you from the standpoint of how the statute had designed things were supposed to work. And the statute was designed so that, oh, go away. Anyway, the statute was designed under the assumption that the library board would never have defaulted on its authority to determine what the library needs. And so if at some point in time there was a period where the library board was too laissez-faire, shall we say, you're going to be building back from another point. This is kind of based on everybody is in kumbaya moment and it's all working well. But knowing what the ultimate goal could be can help you get there. Oh, George, answer the phone. The help desk. Okay, so to track this.
Hey, Laura, I do have a quick comment.
Yeah,
Um,
let me go
the
back.
chat has some conversations about mill levy caps, which can
Yes.
be imposed through charter ordinances. Maybe it'd be useful for us if libraries know that they are subject to a mill levy cap, that we could have a separate session just to talk about the implications.
Well, we can talk about a charter ordinance, that home rule that your city has taken. And most of you should be able to find that resolution, that city charter. The city has a list of their charter ordinances. And what happens is, if nobody, if I had a charter ordinance that said, I am limited up to, I can't go over 5 mills. So number one, the first thing I would say is, how old is that charter ordinance? Some of you have charter ordinances that are 30 and 40 years old. And we're just now seeing gas prices in some places that are almost that far back. Let me see if I can't. Oh, that the chat pops up and then I didn't get there fast enough. Anyway, so know how old that charter ordinance is. Get some good information about what pricing is. And now you have to start doing information, because you can't expect the city council to know if your own board doesn't know how old that ordinance is. And you can't know how, it's a ceiling. It creates an artificial ceiling on the operation of your library. So that's the property tax. Now that's property tax only. Let me go back here to income. That is ad valorem tax. That's the only limiter they can set on you. At property tax, they could say you can't exceed 5 mills. But if you come and ask for dollars that are 5 mills or under, they're obligated to levy it for you. Even with a charter ordinance. And really, if you have a charter ordinance, you should actually be at 100% of 5 mills when you do the ask. I'd probably go in and do the ask at 103% of 5 mills, because if you ever look at your state form, which we'll get into next time, by the time the final levy comes in and the valuation gets adjusted, you'll go under the 5 mil cap. Some of you have even got communities that forgot they have the ordinance and have gone way beyond it. And then they find the ordinance, and we've helped some of you get rid of it entirely. What that artificial ceiling is can be handled in 2 ways. Because eventually it reminds me of becoming Flat Stanley. You're just crammed up against that cap, and you have to start talking about the things that your community requires you can't meet because you're pushing that ceiling. You have to have those conversations. You can't expect them to get rid of it or build you a new ceiling higher up. So if you had a 5 mil cap and they really had to feel the assurance that they had some control over you, because this is a control issue, work for a 10 mil cap. It'll take you another 15 years decently to get there, or more, and resolve at this moment. I'm going to talk about it every year. Where are we in relationship to that cap? What isn't being done that the community needs that because of that cap? You have to build that groundswell. And there's a process to put something under home rule or charter ordinance, and there's a process to get rid of it. And we can go into a whole lot of detail on that for anybody who wants. Your system will be more than happy to come talk with you and your board about mapping out a strategy of communication and understanding to help you either raise that charter ordinance or do away with it entirely. It can be done. And I see that that flashed, so let me see. Charter ordinance, you can't do a charter ordinance for a township. It is a city function entirely, or a county function.
Yeah, she was asking how you would know if you can't find it, and I said check with
see that.
city, and
Yeah.
so that's
If
what
you're a
that's from.
township library, that doesn't apply to you. They don't have home rule authority. Cities and counties have home rule authority only. And there's a process there. I finally got the chat to come up, and we'll see if it goes away now when I click. Oh. Anyway, so take those pieces. There's way too, like I said, these aren't cutesy slides. These are things with information on them. So go back and find your budget and put together, you know, you sent me your 2020 budget, and I haven't, if you did, I haven't responded yet, but I will. But I'm going to come back to how these things looked, and I'm going to say, do you have a complete budget? Now, the key is, okay, I have a complete budget. What do I do as the months go on? You have two documents that you really need to have, and I don't care if they don't look like this, but this is the sort of information your board needs to see. You don't need to focus on carryover, but what is my income or my revenues? And you see here, I've got all the revenues that were on that other page. And if you print that out and you look at it, you'll see they're all there. The issue is here, I'm going to put what I had in that budget in this first column. I'm going to maybe put what's come in this month in income here, just so the board can see it. I'm going to have a year-to-date income column so they can see where we are in the process. And I have a percentage column over here. So if I'm looking at ad valorem and I'm looking at this for my July board meeting, and I know we've got that June money, and the ad valorem tax isn't at least 95%. I know that we've had higher than normal late payments. People not paying that second half of their property tax in May. And I'm going to be watching this to see if it comes in during the year. But I'm, you know, you'll never get 100%, but whatever your community's delinquency rate is, and your city manager can tell you that, if you are operating on a 5% delinquency on a good year, you know that on a good year, I only get 95% of what I ask for. Delinquent tax, you get whatever got collected. It's what's called a pass-through tax. They have no responsibility to keep it from you, although sometimes they do. So we'll talk about that as we look at the state budget form. The motor vehicle taxes are totally pass-through. If everybody bought a new car, you're going to get whatever the taxes were, and there would be more on new cars rather than 20-year-old vehicles. So as an example, for NEKLS last year, we collected 99% of our ad valorem tax. Rural property tends to have a higher paid rate than urban city property. So we collected 99% of our ad valorem tax. On these vehicle tax, we didn't collect 100% of our delinquency tax estimate. We only collected 98%. On motor vehicle, just that line itself, we got 108% of what they estimated. Let me say that again. We got 108% of what they estimated because it's a pass-through tax and it's based on what actually got tagged. Rec and trucks were about right on. Watercraft was a little higher, commercial vehicle was a little lower. The net result was the total tax income didn't, you know, we were able to spend it all because we didn't collect more tax income than we had budget authority for. And that term is next time.
Okay, so there's a question.
Sure.
Is the percentage of the year or is that current
That's
dollars?
that percentage is based on how much you got year to date divided by what you guessed about, you know, what you put in projected annual income. If that makes sense. So it's what you actually banked in the bank under year-to-date income versus what you thought you were going to get. And you're comparing what you got to your best guess from last year. If you get a new grant, or if you got a large donation, you might revise your internal budget to reflect that, because those can be spent in the year because they are not tax dollars. In other words, what you give the city never changes. But this document that shows all your income and all your expenses that you are guiding your ship by have a few limiters for taxes, but it can be updated more than once in a year. You won't get this exactly out of QuickBooks. The budget form, and what I can talk to you about how the procedures, but I would get my totals in these account areas. I would run a transaction detail by account year to date and get that total, and I might have to key it in. I haven't found a good way to get QuickBooks to give me exactly what I want, but this is not too many numbers to key in. And this is a one-page document for your board. So they have it a snapshot. How are we doing is the important part of this. Now, the other thing is a document like this. And if you had an employee benefit fund, you know, I probably should have put a line over my capital and made this look prettier than I did. This has got your income. So I'm looking at my money from all different sources. So I have here, you know, I don't necessarily break out my taxes here. You can if you want to, but you know, you can put the grand total here, the details on the itemized. What you're looking at here are fund balances. The important thing here is fund balances. So you have income. This is always operating on a year-to-date basis. So checks. So if this is a January, end of January report, you've got all the tax money and other things here. They apparently didn't get any tax money in January. That happens to people all the time. You really should. But they'll say, oh no, we only disperse money in the first meeting of the month, and that didn't come in until after that meeting. So sometimes you don't get your tax money till February, but you sure should get it in February. So they have broken out of the money they got, total of the deposits. This gives you a total income that you have available to spend, less the checks that you wrote in January. And that gives you how many dollars I have in my general fund. And then I'm coming down here, and these are reconciled at the bottom, reconciled bank account balances. So in my general fund, I would add the balance of the checking account and the savings account. Those CIF are capital improvement fund accounts, and they would be part of the fund balancing that goes for the capital improvement fund. You need to give your board this kind of, now I call it a treasurer's report. When it came, we've called it a treasurer's report. It's a fund balance report tied off to the balances, the reconciled balances in the checking account. And this is one way your board knows that there's not a lot of fraud going on, because they see the detail of the checks. They see that this is a reconciled balance of the checking account, and it agrees with the fund balances on the top. That's a little heavy detail. This is very simplified. You don't have to do it this way, but you have to have a way of, and under general fund, if I showed you our, and I will start off next time showing you our treasurer's report, we have several different categories under our general fund. We have a petty cash line, we have a grant line, we have, well, we have state grants, we have other things that with Summer Institute, when we had the Summer Institute that we took care of for the state, the courier is all under our general fund as a sub account. So I'll show you how that works next time. So I'm going to leave you with a teaser. What's a mill? So go find out what your 2019 tax rate is. And then I'm going to add, go look up what your 2020 tax rate is. What was your assessed valuation of your entity in both years? And that's that municipal accounts that that link I had. If you were to Google, you do Kansas municipal accounts and reports, and you click the municipal budgets, and you'll be able to find your stuff. And that link was earlier on the slides. So I gave you a little homework that I'm not going to grade. Just, I mean, you know, unless you want me to look at it, but you're going to start creating that budget like we showed you. I don't care. It doesn't have to look like what I did. That's how the numbers made sense to me. It's easier for me to teach. It's one version. But if it doesn't have all the key elements, you're not doing a good job. Has to have a carryover, has to show all income. That becomes the total cash you have available to spend. And these are all mushy numbers. These are your best guess. Don't beat yourself up over it. And things get changed, and Mike put that in there. Thank you very much, Mike. So I'm going to put this PowerPoint in there. The cartoons are worth it. I used to give Jim a bad time about this when I was the finance person. It's just, life is hard. Dilbert had some really good ones about budget. I like this, it's annual. And I hope you don't all look like this. The three people I can see right now on my little tier don't have the video, and I apologize. If anybody needs resuscitation, you should call for help immediately. I know it's a dense subject, and I really want you to have a smile when you sit down and do it. When you feel the smile's going away, get up and do something else for a while so you can come back with a smile, because this is part of your job. I can't sugarcoat that away. And if you need my information, here it is. The important thing I would say is each of you have a library system, and they are your biggest asset. Talk to them. They know you the best. They understand what you're going through, some of the history behind your library, and every last one of them can come walk you through something. And if you have some unusual question and they're not sure, get in touch with me. And if I don't know, I'll ask our accountant and see if I can't get you an answer. When the city republishes a budget, if you ever have your city or your township republish a budget, your piece of that never changes. And the tax part of their piece never changes. They're reflecting having to transfer money from capital reserve, or they've gotten a federal grant or a state grant they want to reflect in their budget. But if you're ever involved with the city saying they have to republish their budget, they're not going to change your part of that budget at all, because they can't change the tax dollars. And for cities and townships, that's really all they care about. That's part of your budget. And that's why you have to have a good, solid story or narrative about what you're asking your entity for. I can't stress that enough. And every one of the systems can help you develop that. So, any other questions? And I ran on.
So the only question that's popped up so far is we should not be affected by the COVID crisis for 2020 if numbers are down.
What I think is going to happen with the COVID crisis is if you really read what the cities are talking about in terms of lost income and having to have people's wages cut back and things, is they lost a huge chunk of sales tax. Or at least they're estimating that. I'm not too sure that's actually going to be the case, since everybody seems to have bought 10 times more toilet paper than they need for a long time. But they're anticipating a humongous drop in sales tax. You don't get any of that anyway. Where I think you're going to be impacted is two ways. People are maybe going to not trade vehicles. They're going to hold on to that vehicle, and the vehicle tax from it would decline slightly each year. The other thing is people will miss maybe the May 10th deadline to pay the second half of their property tax. We don't really know right now how many people paid 100% of their property taxes last December. I never get that number. I don't know if anybody else does. That's a granular level of detail that really isn't too important. But if whatever people don't get paid by the 10th, you'll still get, you just won't get it until a later distribution. So if somebody didn't get their taxes, technically they were late, but I think that's sort of been forgiven right now in the crisis. If they didn't get their property taxes paid till June 1st, you would get those in your September distribution. So that's why I want you to track that property tax. If you didn't hit as much of a percentage as you usually do, I would expect some of that to come in later months of the year. And that's why you want that breakout, so you can see if it actually does or not. And if people are truly going delinquent, then you're going to have to make adjustments in the last 4 or 5 months of your budget. Does that help?
Hopefully. Haven't gotten any responses. While we're waiting though, I'll mention Mike posted that link to the municipal budgets, and I have posted now 3 times the link to the folder that Laura created for the resources here. So if you need, the slides are there already. There's a couple of Excel worksheets, and then I know she's made notes to put more stuff up there.
Yeah.
So
yep.
So this is all there, and Horton Public Library says she's sure she'll need some serious assistance with all this. As I know this is your first year doing it, so feel free to contact us.
Yeah,
we'll sit down and help you.
And that's true I can't stress enough. This is why your system resources are so important, and we're all here to help you. So anything we can do to help get through this it's a shifting sands sort of situation, but there are some budget things that are actual, and so I hope to have more information the next time we talk.
To get one more question.
Sure.
Will cities need to republish with that lower income?
No.
Okay.
No, they just will get less. You can't change the tax dollars because that's levy has already been ticked in. The assessor has it, and they're the treasurer, and that's what becomes part of the next tax statement. So the taxes will not change in any republish of a budget. As you reflect, you need to track the lower amount, but that's your library's budget for library operation inside your library. And it's not private. If the city manager really wanted to sit down and understand your budget, that's fine. And I would also say the mayor is part of your board or the trustee of the township. And as part of your board, they should have a really good understanding of your budget, your entire budget. And that can be an asset. Oh yeah, I would send a date for the meeting. We'll have to figure a date out because it's too late right now. In my head, you have to have 60 days before budgets go into play to do anything about your current mill. So we could have that meeting later this summer, or if while you're thinking about budget, if you'd like to do it in June, we could sure do it in June. Does that suit everybody? We'll pick a June time. And we can, yes, the mayor has a full board. They are a full voting member of the board. There's no honorary about it. They, by statute, are required to be a member of the board, and as such, they vote and count toward the quorum. So technically, if you're a city, you have 8 members on your board. The 7 that are actually on the functional library board plus the mayor, that makes your quorum 5.
Okay. And Mike also
I just saw that. Thank you. Thank you. Well, I hope to see some of you again. If you thoroughly had enough of this, I understand. But the point for next time is we're going to elaborate a little more on budget, but we're mostly going to look at the state budget form that the city or township is filling out, why you have to understand it, and what you need to watch for. Okay. We'll see you in May.
All right. Thank you all for showing up. As soon as I get the cloud recording notification, I will send it out to various systems and lists. So keep an eye out for it.
I guess we could stick it in that folder too, huh?
That's true. Yeah.